Welcome to the Deep Dive. Today we're plunging into Micron Technology, ticker MU. We've pulled together all your sources, and we're anchoring our analysis as of June 26, 2025, with the stock closing at $127.25.
That's right.
Our mission, really, is to boil it all down to the most important insights for you. But here's the big question we're tackling. Is Micron genuinely building this, unbreachable fortress in the AI age because they're America's only memory chip maker?
Is it maybe just navigating a really tough, famously cyclical industry, but doing it with a more expensive factory this time around?
Exactly. We want to give you the context to think through that.
Yeah, we're definitely going beyond the headlines today. We'll synthesize Micron's core business, its financial footing, its place in the market, especially with this huge AI supercycle happening right now. It's about giving you a really full picture of why Micron's story is so relevant, today.
Okay, so we've structured this deep dive into two main parts. First up, we'll get grounded in Micron's basic business, who's running the show, and the financials. Then, in the second part, we'll switch gears. We'll look at how the market feels about Micron, who owns the stock, and then really dig into the crucial risks and opportunities before wrapping it all up.
Sounds like a plan.
All right, let's kick off part one with Chapter 1, Business Analysis. So let's break down Micron's fundamental business. At its core, what do they actually do?
Well, they design, they develop, and they manufacture memory and data storage. These are like the essential building blocks for our digital world. Think of it as the foundation for modern computing.
Okay. And revenue-wise, where does the money come from?
Primarily two key streams: DRAM, that's dynamic random access memory, and NAND flash memory.
Right.
And if you look at their latest numbers, the Q3 for fiscal 25 ending May 29th, well, it shows a really heavy reliance on DRAM. It was 76% of their revenue, about $7.1 billion.
Wow, 76%.
Yeah. And NAND was the other 23%, around $2.2 billion. So you can see their fortunes are pretty tightly linked to the DRAM market and, well, especially data center spending right now.
That DRAM focus leads right into their products then. Can you detail that portfolio a bit?
Sure. So DRAM, that's volatile memory. It needs power to keep the data. It's crucial for high-speed processing, think servers, PCs, graphics cards. And really importantly, this includes HBM.
High bandwidth memory.
Exactly. That's the super fast memory needed for AI accelerators, the kind NVIDIA uses. Then there's NAND flash. That's non-volatile, holds data without power. It's the core tech in SSDs, USB drives, phones.
Okay.
And Micron actually makes its own high-performance SSDs using its own NAND. Plus, they have the Crucial brand, which is pretty popular with consumers, especially PC builders and gamers.
So with all that, how do they stack up globally? What's their market position, their scale?
They're definitely a major player, fifth largest chip maker overall by revenue. In memory specifically, they're number 3 in DRAM and number 5 in NAND. So yeah, they trail the giants, Samsung and SK Hynix.
But there's something unique about them geographically, right?
Yes, and this is really interesting. Micron is the only US-based manufacturer of memory. Full stop. In today's world, with all the focus on supply chains and geopolitics, this isn't just a footnote, it's a key strategic asset.
Okay, so combining that unique position with their products, what's their core value proposition? What problem are they solving?
Fundamentally, they provide the hardware that makes the whole modern data economy possible. Their memory and storage enable these huge megatrends we're always hearing about: AI, 5G, autonomous cars, IoT.
Right.
Basically, their products deliver the speed, the capacity, the efficiency needed to turn all that data flying around into actual intelligence.
And that ties directly into industry trends.
Right.
Things were rough in 2023, but what's the growth picture look like now?
Oh, it's booming again. The semiconductor market overall is projected to hit, $700 billion in 2025 and maybe $1 trillion by 2030?
$1 trillion. Wow.
Yeah. And the main driver, it's the AI supercycle. Demand for generative AI seems, bottomless right now. That's fueling huge growth in HBM, specifically expected to nearly double from $18 billion last year to $35 billion in 2025.
Incredible numbers.
And it's not just AI data centers. You've also got growth in automotive chips, more memory in these new AI PCs and smartphones. It's pretty broad-based.
Sounds like a strong tailwind. But who are they competing against in this space?
Well, the memory market is what you'd call a classic oligopoly. It's dominated by Micron, Samsung, and SK Hynix.
The big three, essentially.
Pretty much. And the hottest battleground right now is definitely HBM. SK Hynix got an early lead, no doubt, but Micron is pushing hard to catch up. In fact, they've said their HBM supply is completely sold out for 2025.
Sold out already. Yeah.
Yeah. But you also can't ignore the long-term threat from Chinese companies like CXMT and YMTC. They're state-backed and becoming more capable.
What about regulations? Governments seem very interested in chips lately.
They absolutely are. There's much more global scrutiny, especially around mergers, acquisitions, and national security. Governments everywhere now see chip supply chains as vital national interests.
So things like the U.S. GPS Act.
Exactly. That's a double-edged sword for Micron. On one hand, potential subsidies for building in the U.S. On the other, risks from export controls or other restrictions impacting their global business.
Which brings us to barriers to entry. I imagine they're sky high in this industry.
Oh, extraordinarily high. You can't just decide to start memory company. First, it's insanely capital intensive. A modern fab costs like over $20 billion, and it takes months, even years to get chips out.
$20 billion.
Yeah, and beyond the money, you need decades of know-how, intellectual property, specialized talent. It's just not a business you jump into easily.
So, given those high barriers, what are Micron's actual competitive advantages? What sets them apart?
Well, they have brand strength, definitely. Micron's been around over 45 years, and Crucial is strong with consumers. They benefit from scale, being a top player. Although it's interesting, Morningstar gives them a non-economic moat rating, basically saying scale alone isn't enough protection from the cycles.
Where the cycles are brutal.
They are. But one fascinating thing is how they're using AI inside their own fabs. They report like a 10% output boost and 35% fewer quality issues. That's a real internal edge.
And switching costs.
Low for basic memory chips. But for things like HBM, switching costs are significant. Think about AMD needing to validate memory for its new GPUs. That takes a lot of engineering and testing, making those relationships stickier.
Okay.
But they're truly unique asset. We have to come back to it. Only US-based DRAM and NAND maker? That makes them essential to the US government, unlocks support. It's huge geopolitically. Plus, their tech progress, like the new 1-gamma DRAM process, is key for future products like HBM4, better density, less power.
Got it. That lays out the business well. Let's shift gears now and look at the leadership. Okay, next up is Chapter 2, Management Evaluation. So let's talk about the CEO, Sanjay Mehrotra. He came on board in May 2017. What's his background?
Oh, it's quite impressive. He actually co-founded SanDisk. He's got over 40 years in the industry, holds something like 70 patents. He's definitely what you'd call a memory lifer.
Wow, SanDisk co-founder.
Yeah. And what's really notable is how he's guided Micron through these intense semiconductor cycles. He managed the 2018 peak, the downturns, the COVID boom, that really nasty trough in 2023, and now this AI-driven surge.
Seems like he's seen it all.
Pretty much. And
Yeah.
strategically, his big focus seems to be shifting Micron towards higher value, maybe more resilient markets. There's this anecdote he tells about a serious health scare years ago that gave him this sort of systems-level engineering view, a holistic way to tackle complex problems, which he applies to Micron.
Interesting perspective. How are they on transparency and ethics?
They seem to hold a high standard there. Their quarterly earnings calls are very detailed, lots of presentations, long Q&A sessions, and Mehrotra himself has a strong reputation. He chaired the Semiconductor Industry Association back in 2019, won various awards, seems well respected.
Okay, let's tie that into capital allocation. How is this management team deciding where to put Micron's money?
This is a really key point. Under Mehrotra, there's been a major shift. They used to buy scale, acquiring companies like Onotera, Elpida, Numinix in the past.
Right, I remember some of those deals.
Now the strategy is clearly to build scale. The huge centerpiece is that $200 billion long-term plan to invest in the U.S. over 2 decades, new fabs planned in Idaho and New York.
$200 billion. That's
Right.
ambitious.
Hugely ambitious. And in the near term, for fiscal 25, they're spending $14 billion on CapEx, and almost all of that is going towards building HBM capacity. It's definitely riskier, more capital intensive, but potentially higher return, plus those geopolitical benefits we mentioned.
So with all that spending, what about shareholder returns? Buybacks? Dividends?
Well, in the last quarter, Q3 fiscal 25, there were 0 share buybacks. The priority is clearly CapEx. They did have a big $2.7 billion buyback in 2019, but it's been pretty minimal since then.
Oh, okay.
They do pay a dividend now. It's a stable quarterly payment of 0.1150 cents per share. That's only about a 0.36% yield, so pretty modest. They brought it back in 2021 after decades without one. It signals commitment, I guess, but reinvestment is definitely the main game.
So the big question then is, how well are they turning all this investment into actual profit? What's the return on invested capital, the ROIC, look like?
Ah, all right, I see. For Micron, well, it's violently cyclical. It tracks the boom and bust cycles almost perfectly.
Only cyclical.
Yeah. The latest trailing 12 months, it's around 8.5% to 8.9%. But just look at the swings. It was over 38% in 2018, then plunged to nearly negative 10% in 2023, and back up slightly to 1.37% in 2024.
Wow. So you really see the cycle in that number.
Absolutely. That volatility is just a core feature of this business. Consistent ROIC is not something you expect here.
Understood. Okay, we've covered the business and management. Let's dive into the financials themselves. All right, we now move to Chapter 3, Financial Analysis. Let's start with the basics. As of our analysis date, June 26, 2025, what's Micron's market cap?
It's standing at approximately $142.2 billion, a hefty number.
Definitely. And how about revenue growth? We know it's cyclical, but can you give us some specifics?
Yeah, volatile and cyclical is the name of the game. Revenue and net income are textbook boom bust. Fiscal year 2023 saw revenue fall almost 50%, and they had a big loss.
Ouch.
But then a massive rebound. Fiscal 24 saw growth over 60%, and 25 is looking strong too. So yeah, huge swings, negative 49.5% growth in 23, positive 61.6% in 24.
And profit margins follow that same pattern, I assume.
Exactly the same. Extremely cyclical. Back in that 2023 downturn, their gross margin actually went negative.
Negative gross margin, that's tough.
It is, but the recovery was fast. For Q3 fiscal 25, non-GAAP gross margin hit 39.0%. Operating margin was 26.8%, and net profit margin around 23.4%. It just shows incredible operating leverage when things turn up.
What about generating cash? Free cash flow, is that just as unpredictable?
Highly volatile, yes. It gets hit by both the cyclical operating cash flow and those consistently high capital expenditures. They were burning cash in 2023.
Right.
But in Q3 fiscal 25, they generated a pretty robust $1.9 billion in non-GAAP free cash flow. And that's after spending $2.7 billion on CapEx.
So they can self-fund these huge investments when times are good.
Yes, which is impressive, but it's also a key risk, right? These ambitious plans really depend on this AI boom continuing strong.
So summing up earnings, consistency is not the word.
Definitely not. Inconsistent over any long period is the reality. Again, it's not really a flaw, just how this industry works. Think about it. $14.1 billion net income in 2018. Then a $5.8 billion loss in 2023. If you want steady earnings, this isn't the place.
Okay, but despite those wild swings in profit and cash flow, how is their actual financial stability? What does the balance sheet look like?
This is actually a strength. Despite the cycles, they keep a very conservative balance sheet. Their debt-to-equity ratio is low, around 0.28 to 0.31. That gives them a lot of flexibility.
That seems prudent for such a cyclical business.
It really is. And their current ratio, which measures short-term liquidity, is strong at 3.13. It means they can comfortably cover their near-term bills, which is crucial when you're spending billions on fabs.
Good to know. All right, let's talk valuation. How is the market pricing Micron today, June 26th?
Okay, valuation. Micron's trailing 12-month PE ratio is up there in the 29 to 31 range.
And how does that compare?
It's significantly higher than its own 10-year average, which is around 19, and it's way above peers like Western Digital at maybe 10 or Samsung around 12.
Why so high then?
Well, standard PE ratios can be really tricky for cyclical stocks like Micron. They often look cheapest at the peak of the cycle when earnings are high, and most expensive or even infinite at the bottom when earnings collapse.
Ah, okay. The denominator effect.
Exactly. So this current PE, around 30, strongly suggests investors are looking past current earnings and valuing the company based on expectations of huge profit growth coming in late 2025 and into 2026, driven by AI.
That makes sense. So, given all that, what about intrinsic value? Can we estimate what the company might actually be worth based on fundamentals?
That's the million-dollar or maybe billion-dollar question. It's tough for cyclical companies. A single precise number is frankly unreliable.
Understandable.
But our educational discounted cash flow model, projecting future free cash flows and discounting them back, it gives a pretty wide range.
Yeah.
$90 to $140 per share.
90 to 140, that is a wide range. What drives that?
Key assumptions. We assumed very high growth for maybe 2-3 years, then a sharp slowdown, and eventually even contraction as the cycle turns. We used a weighted average cost of capital, or WACC, of 9-10%.
Which reflects the risk.
Right, based on a beta around 1.3 to 1.4, showing its volatility relative to the market, and then a low terminal growth rate of 2.0 to 2.5%. Small changes in those assumptions swing the value quite a bit.
Okay, that gives us a framework. We've covered Micron's business, leadership, and financials. Now let's shift to how the market sees it, who owns it, and the risks and opportunities ahead. Get ready for part 2, starting with Chapter 4, Market Sentiment. So what's the vibe on Wall Street? How are analysts feeling about Micron right now?
Overwhelmingly bullish, actually. The consensus rating is a strong buy. Something like 88% of analysts rate it buy or strong buy.
Okay, strong consensus. What about price targets?
The average 12-month target is around $127, $130, which, interestingly, is right around where the stock was trading on our analysis date.
So basically price for perfection, according to the average analyst.
Well, yes and no. What's really fascinating is the range of those targets. It goes from a low of $75 all the way up to $225.
Wow, $75 to $225. That's a huge spread. What does that tell you?
It screams uncertainty, right? The bulls are betting on a massive, multi-year AI supercycle boosting Micron for a long time. The bears, though, they're looking at this and seeing the signs of a classic cyclical peak forming. Huge disagreement on the outlook.
And what was the media reaction like after their last earnings report on June 25th?
Pretty much euphoric. Headlines like, Micron crushes earnings, AI drives record revenue. The narrative coming out of that was extremely positive. Lots of focus on the AI demand.
Okay. What about other market indicators like short interest? Are many people betting against the stock?
Short interest is actually very low. It's only about 2.88% of the public float. That's well below the average for its peers, which is closer to 4.5%.
So not many big players are shorting it.
Exactly. It reinforces that overall bullish sentiment we see from analysts. Few institutions are willing to bet against Micron right now.
And momentum. Is the stock price trending upwards?
Definitely. The price of $127.25 is comfortably above its 50-day moving average, which was around $122.91, and it's significantly above its 200-day average, which was down around $107, $108.
So technically speaking, strong positive momentum, clear long-term uptrend.
Yes, the chart looks quite strong from a trend perspective.
Okay, sentiment looks bullish, momentum is positive. Now, let's explore Chapter 5, ownership structure. Who actually owns Micron? So who holds the majority of Micron stock? Is it individuals, institutions?
It's overwhelmingly large financial institutions. About 80% of the shares are held by them. So, professional fund managers are largely the ones driving the price.
Any names stand out? Who are the biggest holders?
The top holders are mostly the big passive index managers, as you'd expect. The Vanguard Group has around 9.1%. BlackRock has about 8.4%.
Standard players.
Right. Then you also have large active managers like Capital World Investors with almost 5%, and FMR, which is Fidelity's parent, with over 4%.
Are these big firms generally buying or selling?
It's interesting, actually. There's some divergence. We see active managers like Capital World Investors have been adding to their stake recently, but others, like JPMorgan Chase, have actually been trimming their positions. So even the giants don't seem to be in total agreement.
What about insiders? Do the executives and directors own a big chunk of the company?
No, actually, insider ownership is very low, less than 1%.
Less than 1%. Okay.
Yeah. And you might see reports of insider sales looking high sometimes, but you have to look closer. For instance, CEO Sanjay Mehrotra's recent sales were marked as automatic sell, meaning they were part of a prearranged trading plan, a Rule 10b5-1 plan. This lets insiders sell shares over time according to a set schedule. It's generally seen as routine financial planning, not necessarily a bearish signal about the company's prospects.
Got it. So with institutions holding 80%, how concentrated is that ownership?
It's fairly concentrated. The top 23 institutional shareholders together control half the company, 50% of the shares.
50% held by just 23 firms.
Yeah. What that means is that if a relatively small group of these large fund managers decides to change their view on Micron, it could have a really outsized impact on the stock price, either up or down.
Makes sense. Okay, market sentiment ownership. Now for the crucial part. Let's move on to Chapter 6, risk assessment. Let's structure this with a SWOT analysis, strengths, weaknesses, opportunities, threats, starting with the strengths for Micron.
Okay, strengths. First, clearly technology leadership. They have strong R&D, a diverse product line, and they seem to be executing well on that next-gen 1-gamma node.
Right.
Second, strategic market position. Top global player, yes, but critically, again, the only U.S.-based memory producer. That's a unique geopolitical plus. And third, financial health. We talked about this rock-solid balance sheet, low debt, strong liquidity, gives them resilience.
Okay, solid strengths. Now, the weaknesses. What are the internal challenges?
Weakness number one, and it's a big one, inherent cyclicality. Their performance is just incredibly vulnerable to these boom and bust cycles, volatile everything, revenue, margins, cash flow.
Can't escape the cycle.
Seems not. Second, high capital intensity. They have to spend massive amounts continuously on CapEx. That can really drain cash, especially during downturns.
Makes sense?
And third, maybe customer concentration. They rely on a fairly small number of very large customers, particularly in data centers and smartphones. That creates some risk if one of those big buyers changes plans.
All right, strengths and weaknesses covered. What about the opportunities ahead?
The biggest one, no question, is the AI revolution. That potential for long-term growth and demand for high-performance memory, especially HBM, is huge.
That's the main narrative right now.
It is. Beyond that, there are other emerging growth markets. Continued data center build-outs, 5G deployment, more chips in cars, think driver assistance, infotainment, and the broader Internet of Things all need more memory and storage.
Okay, lots of potential growth drivers.
Mm-hmm.
Now, for the scary part,
Yeah.
the threats. What external factors could hurt Micron?
Correct number one, intense competition. It's just relentless from Samsung and SK Hynix. They're huge, well-funded competitors. And then there's that long-term strategic threat from state-backed Chinese companies.
Competition isn't going away.
Not at all. Second, geopolitical tensions. Specifically, U.S.-China relations are a significant risk. Could disrupt supply chains, impact market access. We saw a concrete example in 2023 when China banned Micron from critical infrastructure projects. That cost them an estimated $400 million in revenue.
Yeah, that was a real hit.
Definitely. And third, the big macro threat. A potential economic downturn. A global recession would hammer demand across pretty much all their end markets.
Okay, let's drill down a bit more on some of those macro factors. How does inflation impact a company like Micron?
Directly impacts production costs. Raw materials, energy, water. A modern fab uses millions of gallons of water a day. Costs go up. And critically, construction costs for these new multi-billion-dollar fabs have soared, up maybe 25% annually since 2021. That directly hits the economics of their big expansion plans.
And interest rates, with that $200 billion plan.
Higher interest rates mean a higher cost of capital. That makes it harder for those massive multi-decade investments to generate attractive returns. It definitely adds pressure to the financial model for that huge build-out.
Now, one specific geopolitical factor that's been floated, these proposed U.S.-imposed tariffs of 2025. How would that potentially affect Micron, a U.S. company?
This is a really important kind of complex point. The proposal is for a blanket 25% tariff on imports. Now, even though Micron is a U.S. company, its supply chain is highly globalized. They import specialized manufacturing equipment, raw materials, components from all over the world.
So tariffs would hit them too.
Absolutely. It would directly raise Micron's production costs here in the U.S., and it would also raise costs for their U.S. customers who buy their chips, potentially depressing demand.
This seems counterintuitive if the goal is to boost U.S. manufacturing.
Exactly. It creates what some sources called a glaring strategic contradiction. It works directly against the goal of the CHIPS IPS Act subsidies, which are meant to make U.S. fabs more cost competitive. For Micron, these tariffs could essentially cancel out the benefit of those subsidies. It's a significant potential headwind.
Understood. Okay, we've covered the landscape, the risks, the opportunities. Let's bring it all together now. Finally, we arrive at Chapter 7. Conclusion. Let's try to synthesize everything we've discussed, starting with the bull case for Micron. Why might investors be optimistic?
Well, the bull case is pretty compelling right now, isn't it? It's centered squarely on Micron being in a prime spot to benefit from this AI supercycle. They're reporting record revenue, their HBM is sold out for next year.
The execution seems strong.
Yeah, management appears to be executing well. They're closing that gap in HBM with competitors. They're moving forward on new DRAM technology. And then there's that unique status, the only U.S. memory maker. That gives them geopolitical tailwinds and access to government support.
And it's all built on a solid financial foundation.
Exactly. That strong balance sheet and low debt provide a safety net, which is crucial in this industry. So strong demand, good execution, strategic position, solid finances. That's the bull story.
Okay, sounds good. But what about the bear case? Why might investors be cautious?
The bear case is really rooted in history, in the harsh realities of the semiconductor industry. This business is just notoriously cyclical.
History repeating itself.
That's the fear. This current boom, however strong, will eventually be followed by a bust. That's how it's always worked. Competition is still fierce. Samsung and SK Hynix are not standing still, and Micron is still playing catch-up in HBM, even if they're gaining.
And the cost of growth?
That massive CapEx plan.
Yeah.
Yes, it's needed for growth, but it suppresses shareholder returns like buybacks right now, and it carries huge execution risk. What if the cycle turns down before those fabs are fully ramped?
Yeah, timing is everything.
And finally, those external threats are real. A global recession, those potentially damaging tariffs, things outside Micron's control could easily derail the growth story and crush profitability.
So recapping our valuation thoughts.
Right. Because of that extreme cyclicality, pinning down one intrinsic value number is really unreliable. Our educational DCF model pointed to a very wide range, remember? $90 to $140 per share.
90 to 140.
Yeah.
And the stock price on June 26th was?
$127.25. So trading firmly in the upper end of our estimated value range.
What does that imply?
It suggests the market has already priced in a very optimistic scenario, a scenario where this AI upcycle lasts longer and is more profitable than past cycles, and where Micron executes perfectly on its huge, expensive expansion plans and navigates all the geopolitical stuff flawlessly.
So upside from here requires even more optimism.
Pretty much. For the stock to be clearly undervalued at $127, you'd need to believe something fundamental and permanent has changed for the better in the memory industry structure beyond just the current strong demand. You'd need really strong conviction.
Okay, so for you, the learner, here's the provocative thought to leave you with. We know this industry is defined by cycles. Is Micron, fueled by AI, truly breaking that historical pattern this time? Or are we just witnessing another powerful but ultimately temporary upswing? And maybe more importantly, how much of that potentially new reality is already baked into the current stock price? Something to mull over. If you found this deep dive valuable, please do like and subscribe to the Stock Analytics AI YouTube channel. And remember, for just $4.99 a month, members get priority requests for deep dives on specific tickers. We're planning to cover all the S&P 500 stocks over the next few months, and members get that exclusive priority access.
Or if you just want a one-off deep dive on a company you're interested in, you can always drop us a super thanks on the video.
We appreciate the support.
And now for the crucial disclaimer. This analysis was generated by an AI system. It's intended for educational purposes only and absolutely should not be taken as financial advice. Please, always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.
Couldn't have said it better myself. Thank you for joining us on this deep dive into Micron technology. We look forward to exploring more with you next time.